Hey, what up YouTube? It's your boy John Dash, back to the episode of Dash Every TV. And in today's video, I'm going to be talking about this article. I'm going to be reacting to it about this activist investor group that is taking aim at Tony Xu, the CEO of DoorDash. They want him to resign from his board, and I believe they don't want him to be the CEO of DoorDash anymore. I'm going to kind of be reading this article and giving my commentary on it. And just for some context, I do have experience in the corporate world, a degree in business, yada, yada, yada. So here we go. CTW Investment Group has written a letter to DoorDash shareholders asking them to reject the re-election of Tony Xu to the DoorDash board of directors. Xu is the co-founder, chairman, and CEO of DoorDash, and the only board member up for re-election during the company's upcoming shareholder meeting set for June 22nd. That's tomorrow. As a recently IPO'd company, DoorDash has failed to provide a governance framework that holds its board accountable to all its shareholders. So a little bit later, it's going to go deeper into what exactly they're talking about here. And it's going to kind of show how shady DoorDash is and how shady their CEO and the founding members of DoorDash are. You're going to see that soon, so just stick with me. The letter stated, DoorDash's dual-class share structure with no reasonable sunset period denies public investors an accountable governance structure through which to monitor and protect their investments and grant an extraordinarily high concentration of voting power to a single executive. Now here we go. Here's the fun part. Here's the interesting part. DoorDash became a public company in December 2020, doing so with a dual-class share structure that gives Xu full control over key company decisions. The company's shares are split into Class A shares, which provide 1 vote per share held, and Class B shares, which give holders 20 votes per share held. Now, 1 vote per share or 20 votes per share? Guess which one Tony has a bunch of, or really doesn't need a bunch of. When you're getting 20-to-1 odds, you don't need a lot. Imagine that. 1 for you, 20 for me. 1 for you, 20 for me. What is that? Let's keep going. This is where it gets fun. In an email statement to Modern Shipper, CTW Research Director Richard Clayton said the firm had concerns about Xu's leadership, both as a board member and as a CEO. So we could talk about his leadership as a board member and the shadiness of the stock, 20-to-1 vote. But you think about his leadership as a CEO. I mean, you doubled your revenue and you still didn't make a profit. What's going on, man? Our concerns speak to both roles, particularly with respect to DoorDash's road to profitability, just like I was talking about, and driver classification issues. But as I'm sure you know, shareholders elect the board, but not the CEO. If Xu were to lose his bid for re-election, essentially impossible given the dual-class structure. I mean, it's 20-to-1, so I don't even know what the odds you need. In the letter, the firm said it works with union-sponsored pension funds to enhance long-term stockholder value through active ownership. And the funds the investment group works with have over $250 billion in assets under management and are substantial DoorDash shareholders. $250 billion. So, it's not like me and you who may not even have $250 under DoorDash management, let's be honest. We would like to each be repealed ASAP. But for what it's worth, companies generally try to phase out these kind of practices over a few years rather than instantly remove them, Clayton wrote. But 1 share, 1 vote, and annual director elections are in our minds a much better approach to governance than what DoorDash currently practices. Now, I think that's what most people expect. 1 vote, 1 person, 1 share, 1 vote, not 1 person, 1 share, 20 votes. That doesn't even make sense. 20 votes per share for me, but 1 vote per share for you? That's not straight up, I'll tell you that much. And you can say, oh, no, they knew before they signed on, but nobody reads the fine print. Nobody. So check this out. CTW said that Xu, along with founders Stanley Tang and Andy Fang, control 70% of the voting power, but only hold 12.5% of the outstanding stock. Think about that. 70% of the voting power, but 12% of the stock. You can't make it up. It's not straight up. If you don't want to call it shady, you still can't call it straight up. The company's classified board structures leave shareholders with limited means of expressing dissatisfaction with company's directors stripping shareholders of a critical communication tool with the company's board. What that means is that as a shareholder, usually, like you said, one vote, one share. I can vote with my share if I'm undissatisfied. When you get 20 to 1, I mean, it doesn't make a difference if you and 100, your friends pipe up, because the odds are just not in your favor. Clayton said CTW is concerned about DoorDash's lack of long-term vision and believes that more accountability would benefit the company and shareholders. For instance, DoorDash and other gig economy delivery companies have taken reputational hits from reports of high fees charged to restaurants, listing restaurants without permission, people have talked about this, deducting tips from driver pay, tip skimming, we know about this, etc. While the company has responded to these reports to varying extent, to us, each incident shows the company not really thinking about the long-term consequences of its actions and policies. Damn, that's truth. So the other thing that kind of tells me is that although we're here as drivers and gig tubers and gig economy people talking to you all about these things that we see, it sounds like there's people, the people who invest in DoorDash, these advisory groups, the people above the people, somebody's watching this stuff and they're seeing these concerns as well, because they're saying that Tony Xu and these people in DoorDash leadership that aren't addressing these things proactively are doing it at a detriment to the company. So, as such, they need to be removed, and people with better long-term vision and can take action, they need to find somebody who can satisfy everybody that it takes to run DoorDash successfully. But let's continue. He acknowledged that voting down the re-election of Xu is unlikely, but no votes would signal that shareholders want the board to chart a more responsible course for the company's future. The company has also been growing various segments, including its non-food delivery segment. I talked about that. I said that's where it was going. Maybe I was wrong in saying that Walmart was the one that was going to lead it there, but overall, that's the direction that it's going, and that's undeniable, which has grown to 7% of total gross order value. During its Q1 earnings call, CFO said the more engagement DoorDash is able to achieve with customers, the more it grows overall revenue, aka let's deliver all food, not just fast food. DoorDash will deliver your fast food, your groceries, your car parts, your etc. Once you begin to use multiple categories, that actually increases your engagement with the core restaurant category, he said. And then the other thing we found is that customers who actually engage with us across different categories beyond food also appear to have stronger retention and engagement versus customers who place their order with restaurants only. So we're actually seeing strength because the addition of categories basically makes a user stickier with our platform. All food, not just fast food. So long story short, people don't want Tony Xu back. They think that there's better people for the job. They think that they're shady. Them in the way that the founders control DoorDash. It's not in a fair structure. It's 20 to 1 vote. They own 12% of the company. They have 70% of the vote. And even if everybody basically votes no, what would have to be 12 and 70. So even if 40%, they can basically have 50% of the people say no. I'm not even sure if that's enough. I don't know the math. Somebody that knows the math, let me know in the comment section below. How many people have to say no with them owning the percentage of the board that they do and having the voting power that they do for Tony Xu not to get reelected off the board? But that does it for today's video. I just wanted to share this information with you. I came across it and just, shed some light to how DoorDash works, inner working of DoorDash, but also that there's these investor advisory groups that are kind of looking at the bigger picture, that are looking at some of the things that us drivers are faced with and the future of us drivers, and are ultimately trying to make things better for us, or at least better for the shareholders of DoorDash. If you like this video, give it a thumbs up, hit that like button, smash that like button, this little fun little coochie, and anyways, it sounds like these orders are about to start popping. So either way, until the next time, dash optimally. Peace.